FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And you are listening to the Financial Survival Network. It's Kerry Lutz, and it's been a while since we last spoke with Peter Grandich. New website, you find him at petergrandich.com. That's GRANDICH.com. And Peter, since we last spoke, big things happening with the dollar, precious metals still in a bear market, but overall economy, Euro, Europe, Asia, what's going on here in your opinion?
Well, I think, first of all, I think the general assessment is that thanks to not only mortgaging our future, but probably ruining our children's and grandchildren's future, the United States and some other countries now around the world have greatly increased their debt by printing large-scale amount of money in order to what they perceive better their economies, which in fact I think has done little other than to forestall the inevitable. But having said that, here in the United States, I have not seen, I'm into my 4th decade of being in and around Wall Street, and I've never seen the complacency both among investors and the so-called professional community be so high given the difference between what's happening on Wall Street and Main Street. So I'm really, 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 really concerned. I can't emphasize that enough. Can we run another 5 or 10% or so up in stocks and bond values? Absolutely. When the spigot has been opened the way it is, you can never judge exactly the moment the spigot runs dry. But the bottom line is we're in an extremely dangerous area, and the problem is that anybody that says, well, if I get out now, I'll miss a certain amount. Almost all people, I would suspect, if we could look at all the portfolios that are out there and we take today's date and we look wherever the inevitable high is, and then we look a year or two later and it's lower than even today, almost nobody in that group managed to get out. So even though they might have enjoyed some more paper gains further, the end result will be the vast, vast majority will have less down the road than their portfolios may be worth today.
That always reminds me of Bernard Baruch, his famous saying, I got rich letting the other guy make the last 10%.
Very good point.
And so what do you do here? Because you're making zero yield or less. I mean, we're in a negative rate environment in a third of the world, and you're a retiree or you're somebody, even not, you've got an income, but it's not enough to help you make ends meet. You were counting on your savings, earning a return to help make up the difference. Now you're going to have to invade the corpus, going back to my legal days, which turns my stomach. But hey, so you're going to have to invade the corpus of your trust to help you make ends meet, which means potentially you are going to outlive your money, which is a definite nightmarish scenario for many of you out there.
Yeah, and Kerry, that is part of the reason we've even sustained where we've gotten to, and that is because people who in other past cycles and generations would have never chased yield had to do so because of what's happened, led by the Fed and, of course, now by other central banks around the world, to the zero interest rate policy. You did not see previous generations having to become experts on preferred stocks and master limited partnerships and real estate yields. The most you would see people at that point in time, certainly when I entered as a stockbroker back in 1984, was there'd be some interest in utility stocks because they had a fairly safe dividend yield. But by and large, people were able to live off what they would put into fixed income, where principal was far more secure. And that has helped accelerate and underpin the equity markets because of that money flow chasing that yield. But nowhere is it more dangerous now than in a place that at one point in time would be known because of its nickname, junk bonds. We don't call them junk bonds anymore, and they actually still call them high-yield bonds, but how high are those yields compared to what they used to be? But here in that particular market, we have seen such amount of money flow into certainly far more risk of principal bonds than, say, treasuries or municipal bonds. And the spread now has shrunk to where it's just not worthy of that risk. But people desperate for that yield that you spoke of to try to maintain a lifestyle that they've grown accustomed to, in which many cases is well beyond what they need to be. But nevertheless, that market itself is probably the most likely one to blow up first and cause the most damage to the very people who had assumed and hoped that it would take care of their retirement needs and what have you. And so, and that's an area where so much of my time is focused now on the retirement segment, and seeing people chase yield is just a recipe for disaster. It may not be today, and it may not even be tomorrow, but there's going to be, and trust me, it'll be very ugly when that happens, because there won't be any opportunity to make up for it, because most of those people have already been out of the earnings curve. They're not going to be able to go increase their work or even go back to work. Very,
very sad. And it harkens me back to the day when I first read a book by Benjamin Graham called Securities Analysis. And there was a junk bond market back then, and they called it junk bonds. And maybe it wasn't security analysis. He wrote a number of books, but he specifically addressed the issue of junk bonds and their suitability as an investment for the individual investor. And he specifically stated that the individual investor should never invest in junk bonds because the individual investor was unable by any measure to properly assess the risk inherent in junk bonds, and the yields were always seductive, often double-digit yields, but because back then risk was actually priced into yield, the individual investor was never capable of properly assessing the risk involved in that yield. And I don't think, Peter, anything has changed in the past 70 or 80 years since Benjamin Graham wrote his books. And it wasn't Securities Analysis. It was another book, because Securities Analysis was written for the trade. This was a book directed towards individual investors. Maybe you remember the title. But he specifically addressed this issue. It's been addressed by others. And even professionals can't really properly price junk bonds. Maybe they're appropriate after the market's crashed, but certainly not when they're trading at all-time lows in terms of yields.
Well, and that probably takes us to the bigger problem, that because I had not been so focused in this area for several years, I didn't conclude how badly it had grown. And what I'm talking about is, we've been using this word professional advice. And so that, like when we hear a professional doctor or a lawyer, we assume not only a certain degree of education, but a certain, most likely, certainty of performance because of the skill we assume that comes with those titles. Well, have we really learned anything, like you said, when we know now statistically that still 80% of equity fund managers underperform simple index investing, and 85% in the bond market. And what I like to attribute that, and what I share with people now, is that imagine if I told you that 8 out of 10 doctors or lawyers couldn't perform up to the level that you're hopeful that they're going to deliver to you, you'd be so overly concerned, you'd be actually worried. Yet the very people most people have entrusted their monies to in one way or another, whether it's a local financial advisor down at a local financial institution who nowadays almost exclusively is just a gatherer of assets, is not handling it individually, has turned it over to some program the financial institution they work for has, or some group of managers, and yet all those people have greatly underperformed. And yes, there is 20% of those that do perform well. And I know of only one money manager that if I didn't handle my own money that I would actually give it to. But if you try to find that 20% and you're fortunate enough to do, the following year they're part of the 80%. So it's an amazing phenomenon. And now that I'm well into my fourth decade being around the financial arena, I sit back and I am somewhat not only a little bit ashamed of my past actions, which I've written about in the book. I was no guardian angel for 30-something years, but when I look to see what is transpiring on Wall Street and the things that just happened, Kerry, just a few years ago, less than 10 years ago, we had a financial crisis that literally took us to the brink of destruction. And nothing really has changed. Most of all those people are still in the business. Certainly those institutions are. Some were fined, maybe 10% or 20% of what they actually made off of what they did during those crises. And what do we have? We have a market that's so much more higher, much more richly valued, and far more indebted group of people around the world. So it's just a matter of time before discussions like you and I are having are going to take place about, oh my God, it happened again, why? And yet the tools that are normally going to be available to try to get us out of those difficulties are not going to be there.
Yeah, exactly. Because when you've got an environment of manipulated, controlled interest rates where the market doesn't determine them, what happens? Then you've got malinvestment and you've got all these distortions. Money isn't proper, capital flows are not properly allowed to occur. And malinvestment, like I said, takes place on a wholesale level. Bubbles get blown. I mean, you're always going to have these bubbles taking place because they're just human nature, just like tulip mania, right? But you don't get 3 or 4 of them occurring at one time in real estate and stocks and bonds. You just don't have that type of thing. And we're going to look back on this in the decades to follow, and they're going to think that there was insanity that took place on a massive scale. And I think if these people aren't strung up in the public square, they're going to be in jail cells, prisons full of them, or perhaps they'll be on islands with their own private navies protecting them from the masses who would like to just rip their throats out.
I agree with everything, except I don't think it will get to the extent to what you just said at the end, and I'll tell you why. Part of the reason that this has been so-called allowed to continue is that the bulk of typical people that make up society don't really comprehend what happened 10 years ago. And if I may, I'd just like to expand on that because I have found this now that I speak and live this moment by moment now in my livelihood. I have just seen it, that it doesn't really matter who I'm speaking to. Even what we would say is well-educated and affluent people who are making serious money have not comprehend what actually took place 10 years ago. Look, at the end of the day, led by the United States, but done in many parts of the world, large and mid-sized financial institutions sold bad products to people knowing they were bad. In other words, hundreds of billions of dollars of mortgage-related products were sold, not only knowing that the people who were being extended the credit and all were unlikely or almost certain not to be able to properly pay it back, but many of those financial institutions went and took the other side. They bet against them. And what people, and it all came out, it's been documented, it's clear and evident, and the only thing that occurred is some were found guilty in terms of civilly and some fines were paid, but nobody of any real consequences went to jail. But if you explain it to people and you put it in a principle that they understand, they would be just marching through the streets. And the way that I like to do it, Kerry, is imagine if we turned on the news tonight and we heard and learned that GM, Chrysler, Ford, and other leading car manufacturers have been building millions upon millions of cars knowing they were going to crash. And they actually bought life insurance on the people they sold the cars to, so when they would drive it and it crashed, they would collect again. Well, the people would just forget it. But that's, in essence, what had transpired. And what's very alarming is almost all those same financial institutions are in business, and many of the people that work there are still the people today that are out there supposedly giving financial advice. And I'm just flabbergasted, but not shocked, because I don't expect politicians to be involved, because they're only going to get involved when people start really demanding things, or else they're just going to keep living off the land, so to speak, forever. And so until the public would understand it, and then we just learned a little, more than a year ago, and this part is even still technically legal, that hundreds of millions of dollars by different groups, which were total billions of dollars, was spent to lay fiber optics simply for the availability that in microseconds you could jump in front of somebody's order and pick it off, knowing full well they were coming to buy it, and stick it back out there for a penny or two. And again,
with fake prices.
Because the public doesn't understand it, they don't understand the ramifications. So there, too, I give them an example. It's like, I learned you were going shopping. I know you had to go buy your food. I ran down to the food store with your shopping list. I bought all you wanted. I marked it up a few pennies, and I put it back on the stand, and I knew you would come in and buy it. And that's still going on legally. So to sit now and people say to me, and listen, there are good people within these financial institutions. I do not want to broad brush and say that the 300,000 licensed financial people in the United States, which 200,000 are some sort of in the sales force, that they're all bad. I'm sure there's several of those people getting up in the morning trying to do good things, but unfortunately, the institutions they work for and the game that they've set up is very corrupted. And this continues. So when people sit and they tell me, well, I'm with such and such, and, or I watch one of their ads and all, it's destined for trouble. And and the sad part is we've run out of ability to kick that can down the road again and make short-term fixes when the inevitable crisis comes. So this crisis, when it does take hold again, and I believe it's not a question of if, but when, it's going to be much longer, it's going to affect people for a lot more, and it's going to be extremely difficult to get out of versus the previous ones.
Oh, it's just going to be the mother of all. It's just going to be god-awful. And there's just going to be mass financial devastation. You know what's coming here, Peter. You just know it. There's no way out of it. There's just so many. It's a perfect storm. So many problems are converging at once because they've been put off for so long. It's kind of like that bridge that you go over every day, and it's got potholes on it, and it hasn't been painted, and they keep filling in the potholes, and every couple of weeks the the potholes back, and it's been neglected, and it's way past its useful life. That's our financial system, and that bridge is just going to give out one day at the worst possible moment, and there's no replacement for it.
The biggest problem, sorry, Kerry, the biggest problem in that is there's a wonderful YouTube video out of a professor a few years ago who spoke about, it's called Pulling the Wagon, and he brought up the fact that more and more Americans are, in a sense, in this entitlement phase and have grown dependent on the government for part of all their daily needs. And the fact that more and more people were getting in the wagon versus pulling it, and the government was punishing those who were still trying to pull and supporting more and more those who were sitting in the wagon, and taking away a percentage of those people in the wagon who had no choice but to be there, that we are so entitled up, so to speak, that it's going to be impossible for even government, when the people cry out, please, you must fix this problem, that there'll be the tools available for them that have been available in previous crises. So it's an extremely ugly situation. We haven't even talked about the geopolitics and all the things that are happening around the world, particularly how the United States is losing its prominence, both not only as an economic power, but as a military power and what have you. And so I just believe that there are so many things now that are coming together, and even if it is the seventh only inning in a 9-inning game versus the bottom of the eighth or the top of the ninth, that it's just better right now to start an approach with one's finances to be a live chicken versus a dead duck. I mean that's in the most simplest form. And the way I like to close when I speak to people is that it's time to put the feathers on. It's time to, I don't want to say put our head in the sand, but I think we have to become extremely defensive, and I think we have to be realistic that the price has to be paid for the way we've lived. And when the time comes, it's not going to be a very quick solution to fix the problems that have amassed now for decades. It's not that it's just this administration that caused it. What this administration has done is just open spigot full wide, and it comes from both sides of the aisle. It's not any one particular political party, but the problem there too is we haven't had real political solutions come out of Washington in a couple of decades on a wide spectrum, especially the groups that I deal with, business owners. It's far more difficult now to be a business owner in this environment than it has been in any other generation. So and small business has been the backbone of the economy in the U.S. So there's just a whole host of reasons that you and I can speak for 12 hours versus a half hour and still not fully cover and give it justice to the difficulties that are out there.
Yeah, the problems that are ahead are really mind-numbing, back-breaking. It's going to require complete restructuring and the way everything is done in this country, from the government, the way the government does it, the way the private sector does it, unions, environmentalism. It's a form of decadence that the world and the country just can't afford anymore. We just can't afford it. And you might not want to hear that, but that's just the way it is, that we just really cannot afford the diversion of resources to things that are of dubious value. And you see this in California. Half the water in the state, while they're going through this enormous drought, is being diverted and dumped into the ocean to basically save what is probably an extinct species, this river smelt. The thing is gone already, and yet these environmentalists, through a lawsuit, have gotten a judge to force them to dump all this water, and now you got this really oppressive rationing. And that's just one example, Peter. So I don't know what the solutions are, but the crisis coming maybe will force the leadership and the people to really focus on solutions rather than distractions that we can no longer afford.
No question about it. And I like you said, it will only be time, and it'll be a generation at least, if not more, before things can actually get back to a more reasonable way that society once was willing to live, and didn't need all the stuff and didn't expect government to do all the things that it has put itself on its shoulders now to do.
Absolutely. Hey, Peter, we got to get going. Just tell us where we find you again, your new website.
Sure. Well, the website that is the home company for the four different businesses is Peter Grandich. It's one word, Peter Grandich, GRANDICH.com. And everything is self-explanatory there. There's an ability to get my commentary free by just providing an email address.
All right. And you'll, as always, find the link in the show notes to this interview on financialsurvivalnetwork.com. Take a look at the site. Got hundreds of articles coming from all over the world telling you the true scope of what you're facing, along with solutions. Sign up for the newsletter, the free webinars that are on the way. Peter, thanks so much for connecting. It's a pleasure talking to you, and good luck.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.